Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the data of Bitcoin, taking a look at what's been going on most recently, what changes have occurred, and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this one, though, guys. We've got a few things I kind of want to talk about. We have a little bit of @way theory. We have some smart money concepts, some changes that have occurred here, and just a recap on those macro levels. We also want to talk about what's going on chain, and I think this is a good place to start. So let's start right up here. Up the top right hand corner, we have inflows, outflows, and then the difference between the two. We can see that we've had 2.2356 million coming onto exchanges and 2.2149 million coming off the exchanges. Therefore, the difference is 20,680 BTC. It's not a huge number, but it is positive. This means that more Bitcoin has flowed onto the exchanges than has flowed off the exchanges recently. It is quite a low number, so I'd still say this market is neutral, can go in either direction, and this is not indicative of bearish or bullish, okay? Although technically it would be slightly on the bearish side. As we can also see, the exchange balance of Bitcoin also has been ranging sideways since December. Even though price has been moving up, the exchanges have steadily been increasing the amount going on, and it's just been transferred between participants. This is really important that we understand this. As retail investors, one of the things that we need to understand, and it comes down to the very basics, is that when someone is buying, someone is selling, right? We often forget about this, that if you're buying, then someone sold that to you, right? And one of the things as retail investors we need to get better understanding on is that if there's a lot of retail investors that are buying, then who is it that is selling? And usually when we take a look at the wallets, it's coming from the institutional level, right? Big players, billionaires are selling, and they're selling it to retail investors. And that's ultimately why you see these kind of flat periods in time, and also exactly what is going on over here. You see these transfers of wealth occurring, okay, between participants. There's buyers and there's sellers. There's inflows and there's outflows, right? So it's important that we kind of reflect on that. So when we see this, I'd say it's incredibly neutral. It's been neutral, although if we actually break this down into a much more granular level, it does appear to be more bearish than it does bullish. And that's why I've been quite this overbearing bearish person on the channel for quite some time, because ultimately the data, it doesn't really support the idea that we are bullish right now. Yes, price has moved up, but that isn't exactly very natural in the way that it's been moving either. And as we saw with the ECB yesterday go 0.5 on their interest rate hikes, the US and the Fed will be looking at that thinking we might do the same. Bearing in mind that European banks are also struggling in a very similar way, but not as severe yet, that of the US banks. But I think that the Fed don't really have a choice. I think 0.5 interest rate is what is needed in order to kind of curb the inflation on that side. And we have to bear in mind that the interest rates that the Fed have been doing are ultimately what caused the banks to kind of fail this way. A, they sold the bonds. They then, B, put the interest rates high, which then C, lowers the value of the bonds, and so forth, right? And we can kind of see these things kind of playing out. So do we think that the Fed knew what they were doing this entire time? It's not exactly a stretch to think that they sell the bonds, they put the interest rates up, which negatively impact the bonds. So they would have known that they would have sold bonds at a premium to people, and now they're buying them back at a premium. Like, there's a lot of stuff going on. Lots of mistakes have been made, such as the 0.25 a little while back. That should have been 0.5 over on the Fed side of things. So I would say that with ECB going 0.5, the Fed might look at that and think 0.5 is the way to go. And in the data, I think that's kind of where things are being priced too. I think a lot of people are expecting bad news and pricing it in right now, as in, you know, prices bumping up only so that they can short it later. It's going to be interesting to see how that plays out. So let's move on to the next page, which basically is a graphical representation of inflows and outflows. And we can see that we had a significant surge to the upside with both inflows and outflows. But we have obviously slightly outpaced the outflows with more Bitcoin hitting the exchanges. We can see that with this red spike up here at 78,000. It has cooled off a little bit, and yesterday we actually saw more in the way of outflows than we saw inflows, but it is minor. We saw basically just over 1,000 Bitcoin more coming off the exchanges than went on. It is really insignificant on the grand scheme of things. So ultimately, these numbers are small. They're low volume. That's not impressive. As we move over into wallet counts, we can see some interesting things and some interesting updates that have occurred over the last little while here. We can see the Bitcoin dust. These are your basic retail investors at the most vulnerable level, have the 9-to-5 job, doesn't have a huge amount of money to invest and all that kind of stuff. And there has been a surge to the upside recently. We can see that there's 11,656,567 wallets that have over 0.01 BTC in them. I'll call it dust because it is a very small amount of Bitcoin. Now, as we come up into the other retail size wallets, Krill, which is over 0.1 Bitcoin, Shrimp's over 1 Bitcoin, and Dolphins over 10 Bitcoin, well, we can start to see that they kind of had a bit of a pullback. We saw that recently. There's a little bit of an uptick here yesterday, but it's minor in comparison to the kind of dip that they did have. Profits were being taken at the retail level, with the exception of the high net worth individual that has over 10 Bitcoin. They actually decided to take their money out of the bank and put it into Bitcoin, in my opinion. And the reason for this is it's an uninsured amount over a certain level, right? Here in the UK, I think it's 75k. If, for example, you have more than £75 sterling in the bank, then you're going to want to reduce that and make sure you've got only an insured amount in the bank, just in case something happens to the banking system, and you want to be insured, right? And if you've got any uninsured funds, then you're going to want to put that somewhere else. And I think that's kind of what's gone on maybe with these high net worth individuals. They've taken out some of the funds from the banking that they didn't want to have that much exposure to fiat within a banking system that's potentially on the verge of collapse, so they put it into Bitcoin. I think that's the only reason I can explain why they'll be buying the pump here to the upside. That being said, as we come up into the larger institutional level wallets, we can see some other interesting things that are occurring. So off the bat, we have sharks. These are over 100 Bitcoin. I liken the sharks as aggressive traders. They follow the price action. They've done incredibly well recently because they bought in December, mid-December, before any pump to the upside, and they bought significant value or significant volume of Bitcoin. They've been taking profits since we've been in the higher ranges. You can see these wallets just bouncing around a little bit, and then recently they did take this up into this recent high here, and I expect these guys to also be taking the profits there. They're basically just trading Bitcoin's price, and at the moment, recently, they've been doing a very, very good job at it. Historically, it's hit and miss. Sometimes they are great, sometimes they're not so great. So we can't look at these guys and think exactly what's going to happen to the price action. They've made some pretty big catastrophic mistakes in the past, but this one is definitely something that they've done very, very well recently. So it could be that they're looking at Forex and they're seeing that the DXY was going down, and therefore they were able to kind of capitalize in on that. That could be what's going on. But it's interesting to kind of see how the sharks are performing. Ultimately, the whales, which are over 1,000 Bitcoin, have had an uptick recently, right? So we had our lows down here at 2002 wallets, and right now we're rocking a 2013 wallets. Again, this isn't overly that impressive. It is interesting to kind of see how we've kind of come down. If I take a 365-day view, you can see that there's nothing bullish about what's going on with whale players in the space. Now, you can cut the data differently. Okay, this is data that is for Bitcoin wallets that have over 1,000 Bitcoin in them. That means I haven't put an upper cap to it. Some people are capping this data, right? Because they don't like the idea of showing you a wallet counts that are decreasing. So instead what they do is they say, look, between 1,000 and let's say 9,000, we're going up. These beta players are buying, but they are completely omitting the larger institutional players as well, who has maybe over 9,000. So when I take my data, I look at it as a over 1,000 Bitcoin. That takes into consideration anybody who has over 1,000 Bitcoin or is a whale of some kind. And here we can see this trend to the downside, right? It's very obvious when we see that black line being the number of wallets that have over 1,000 Bitcoin has been decreasing ever since that bottom was in June, right? And I obviously joke about this because a lot of influencers who draw trend lines on their charts, for example, were basically saying the bottom was in June. And I was here saying, well, if that's the case, then the whales are selling the bottom, right? And they've been selling the bottom and they're selling into that pump to the upside, which is a pretty typical whale thing to do, by the way. they sell into pumps and they buy into dumps. Now, essentially, June was not the bottom, and we were right about that because the data didn't support that June was the bottom. Whether or not that FTX had to go or not, I still think there was going to be something that dragged the market down. And then, of course, we have November lows. And what's going on here with the November lows? Well, fuck me sideways. We can see that the whale wallets are going down. This basically tells us that, again, they're selling into the pump that precedes that, right? And we can see that we've gone down into new lower lows on the number of whale wallets, right? We hit that 2002 wallets, whereas in the November lows, we had 2,103 wallets. Okay, so we know that there's less institutional money now, even though the price has moved up, which means how did they get out of their positions? As I said at the beginning, there's someone who is selling and there is someone who is buying. And right here, we can see very clearly, ever since November, it's the institutional investors, these billionaires, these multimillionaires that have been selling their Bitcoin to those retail investors, pushing that price up a little bit. It's interesting. Now, we are seeing a little bit of a bottom here, maybe. Maybe we're starting to see a bit of a reversal. And one of the key things that we have to bear in mind, and I said it before and I'll say it again, there's a buyer and there's a seller. Okay, and if the whales are buying, well, the shrimps and the retail investors must be selling, right? You can't just magically make Bitcoin out of thin air, right? There's only a certain amount of the supply out there, and of which I'll come over to this data. We can see this page here. Load 19,319,812 BTC. So we know that there is, although that data needs updating, we can see that there is a significant circulating supply, and that is ultimately what is being traded upon. So when we take a look at our wallet counts, we can see that the Kraken went up a little bit, got the whales that went up a little bit, and it was at the expense of people who were selling. Likewise, when we see all those whales selling, they're selling their Bitcoin and it's being purchased up by retail investors. Why is this important? It's important because do you think that retail investors with limited funding capabilities have the ability to even push the price up into new all-time highs? I think it's very, very doubtful. You need to have a large chunk of the Bitcoin circulating supply held at an institutional level. Okay, it's all about supply and demand. And until price kind of gets moving to a point where significant demand comes in, and I don't think that's going to happen until you've got institutional investors, the people who own the mainstream media companies, for example, willing to actually start talking about it in a positive way. They're only going to talk about it in a positive way once the institutional investors are in. There's a narrative. There's always a narrative. But, you know, that's the data. It hasn't overly changed too much. We've got a little bit of positivity when it comes to the Bitcoin whales, but I think it's all minor until we start seeing a bigger shakeout of the retail investor. So let's jump down into the charts. Okay, let's take a look at smart money concepts when it comes to BTC. The big takeaway, the big update here is, of course, that we've had this change of characterization. It is still not confirmed yet. Okay, this only gets confirmed if we close above that level right over here. Okay, and I'll try to get this drawn on. It would be $25,230 approximately. Okay, if we close above that level, then we get this bullish change of character at the daily level. Okay, if we do not, that will disappear tonight if we close down lower than that. Okay, and we still remain then in our bearish state of play. Okay, so as much as we want it to be bullish right now, I don't think that's really something that we're going to see. We can also get some false flags with these. We can't be too confident until we get a break of structure, and I don't think we're necessarily going to see that. But this could be the start of something, and I'm willing to acknowledge that. Ultimately, a correction to the downside is going to happen regardless of whether or not we get this change of character, right? If we get this change of characteristic and we go and flip from bearish to bullish at this daily level, that's great. But it doesn't stop us from going down and filling these gaps. It just prevents us from maybe dropping down lower than our week low at the moment into new lower lows. I'm still not confident that that is something that's going to occur, but it is what it is. Okay, and we can't kind of, tell you otherwise. It simply is what the data is suggesting to us. So ultimately here, what was going on is if we do print a change of character, we'll be looking to see a correction to the downside, and then we're looking to see whether or not we then confirm this with another push upwards. We'd have to push up pretty significantly to confirm that anyway. You're probably talking 40K to kind of confirm it, maybe not that high. possibly 30, probably more like 33k, and to get another break of structure and confirmation of that move. So ultimately, that would be really interesting to see. Now, our oscillator, our stochastic RSIs, are overbought on the weekly, daily, 4-hour, and hour at the point of recording this video. So that would be telling us that a big correction down is likely to occur, and equilibrium, I think, is not going to hold necessarily. I think we have to be looking at less than 20k in order to really kind of fill those out. So a nice deep correction, I think, is coming regardless of whether we get that print to change of character to the upside. Now, from an Elliott wave theory point of view, well, we're testing the upper area of our parallel channel. Higher highs and higher lows have a tendency to break to the downside. That's everything that's been going on in this bear market, right? Higher highs, higher lows, we broke down, okay? Higher highs, higher lows, just over here, we broke down. And again, all of these parallel channels are higher highs and higher lows that break down, higher highs and higher lows that break down. There was this exception right here where we had the higher highs and the higher lows, and yet we broke upwards, okay? But as a part of a bigger channel, it's higher highs and higher lows, and chances are that we break downwards. Now, in a bullish market, you actually do the opposite. And I speak about this all the time because a lot of people get this wrong. Ultimately, lower lows and lower highs break upwards, and lower lows and lower highs break upwards, right? These parallel channels are showing you what happens in a bullish market, whereas what we've got going on in the bearish market is the opposite way around, right? And a lot of people think of these things as, oh, look, we're going trending upwards because we go into higher highs and higher lows. And ultimately, they're not really taking into consideration that all those are just short-term movements. And actually, the part of the bigger macro is that you're going to be breaking down. Now, where does this put us? It puts us in a strange situation, because not only are we heavily overbought on all these ranges as we pushed up here, we've also kind of potentially gone into a X wave territory here with a potential Z wave down lower. This would basically put us in between that $10,500 to $16,500 range. Okay, now that isn't a guarantee because it can end at WXY, but looking at the bearish economic climate globally and everything that's going on in the charts and the on-chain matrix and the way that institutional players and big billionaires and millionaires are just simply not funding the moves to the upside, instead they're selling, tells me that we are likely to see these lows, and only when we see these lows will retail investors actually be forced out of their positions because they need the money. They can't possibly see Bitcoin drop down into those lows. And a lot of people have been FOMOing in, they're going to get hurt and get liquidated and so forth. So I think there's going to be a transfer of wealth from retail to institutional level and billionaire level players. And I think that will happen, and it will be very bad for retail, but it's one of those things that unfortunately we see time and time and time again. Unless retail can band together and work collaboratively together, I cannot see us beating the whales. So yeah, that's where that sits. Now, from key levels on our weekly time frame, we have obviously the key ones that we've always been talking about. On the real bearish low side, 6,500 to 7,500. I don't think that's likely to come in, but it is what it is. We have a key level down here about 9,600. Again, it seems a little bit on the too low. For me, I'm targeting this one. This one seems to be the most obvious, which is 11,600 and 13,900. This little yellow box range right in here, this one seems to be the one that I think is where we're likely to end up. My big concern, though, is that we actually are able to rally up, maybe up towards that kind of 33, 35k range. If we do something like that, that actually then brings us right back down into these potential low points as a big corrective structure. As I said, WXY going down would be the territory here. And then we know that everything that's going on at the moment is just corrective. We're not trending to the upside. I've been through that a dozen times at this point. We know that we haven't got the internal structures from the Elliott wave theory to be trending upwards. So instead, what we've got going on here is the potential move to up the upside that then triggers us with a big move to the downside. And that would be something that would trap out so many people, because they would think that the price is going one way, only to then kind of have this mini bull run come to a crashing end and drop down into new lower lows. And this will take us into very significant lows over a very significant period of time. So I don't want that one to play out. I much prefer the Z wave. I'd much rather just kind of get it over with and be done with it, rather than trying to have this kind of prolonged. But ultimately, the economic climate around the world is what's going to dictate that. Until big institutional investors are happy to kind of jump into this space and force the price and force retail out, by the way, which is a requirement, I don't think we're going to be getting out of this anytime soon. But let me know what your thoughts and opinions are down in the comments. Unfortunately, I still remain bearish. As much as I want this to be a bull market, I'm just not seeing the data to support that. Ultimately, there's a lot more to this than just drawing a trend line or looking at an indicator or looking at the history of Bitcoin, when the history of Bitcoin has basically been invalidated, in my opinion. There's a lot of variables that have now changed that were never around in previous cycles. And to think of history repeating itself, I think is just naive. But let me know what your thoughts and opinions are in the comments below. Really interested to kind of canvass everyone's thoughts on this one. And I will catch you all in the next one.